Welcome back to Investing Talk Podcast. We have a really focused mission today, something a lot of you have been asking about, actually. We're zeroing in on Block. And the pressing question for us, based on all this recent data from October 2025, it's pretty simple. Is now a good time to buy this stock?
That really is the million-dollar question, isn't it? And it's rarely just a yes or no answer. We need to cut through the noise here. We'll look at the core foundation, the financial health. Then we'll see how the market's actually pricing that value, looking at momentum, technical signals, and crucially, those upcoming catalysts identified in the latest reports. We want to give you, the learner, the full picture.
Absolutely. Think of this analysis as your shortcut to getting up to speed on, well, one of the biggest names in fintech. And hey, as always, if you want us to look into a specific company for a future analysis, please drop a comment below. We genuinely love tackling your requests. But for now, let's dive straight into Block's core financial health. Okay, so when we look at any growth business, first stop is usually revenue, right? And Block's trailing 12 months look, well, really solid. Revenue's at $23.83 billion. That's a pretty healthy 10.06% increase year over year. And what's important is that analysts don't seem to think it's slowing down. They're projecting it to hit, about $27.46 billion by fiscal 26.
Yeah, that's the projection. And what's maybe even more interesting is how that revenue is turning into profit. Much better profitability. We're seeing pretty strong gross margins, around 39.6%. And the net profit margin for Q2 2025 was sitting comfortably at 12.4%. But the real headline, I think, the thing that gets growth investors excited is the earnings per share, the EPS. It looks like it's accelerating dramatically. The consensus is projecting EPS to jump, get this, by 40.5% between fiscal 25 and fiscal 26. So from about $2.63 to $3.69.
Oh, a 40.5% jump in EPS? When revenue's growing at maybe 10%? That's a huge leverage. Where's that coming from? Is it just cutting costs to the bone, or is something else driving that efficiency?
That is exactly the right question. It's not magic, no. It's largely margin expansion. The sources are pointing towards their higher margin stuff like Cash App's financial services, Square's software subscriptions. Those are growing faster than the lower margin transaction processing, so they're getting fantastic operational leverage. They scale revenue without scaling costs nearly as much.
Oh.
They don't need 40% more people to get a 40% EPS lift, It signals they're becoming a really efficient profit machine.
So the engine's running efficiently. But is the chassis strong enough? I mean, you don't want rapid growth collapsing under debt.
Good point. But the balance sheet looks incredibly solid, actually. That really reduces the risk. They've got a modest debt-to-equity ratio, just 26.3%. That's quite low for a company this size. They're not overly leveraged. And that, combined with strong cash generation, lots of liquidity, it keeps coming up in the reports, it gives them a ton of strategic flexibility. They can invest, handle market bumps, whatever, without much financial strain.
Okay. Stable, efficient, but fintech is brutal. Competition everywhere. What's Block's moat? What keeps them ahead of all those niche players popping up?
It really comes down to the ecosystem, the connection between Square and Cash App. It's quite unique. Think about it.
Okay.
Square has millions of merchants. Cash App has millions of consumers. And they're not totally separate. They share data, insights. A merchant on Square taps into the Cash App user base and vice versa.
Kind of like a closed-loop economy they've built.
Exactly. And that integration creates really high switching costs. If you're a small business using Square for everything, POS, payroll, invoicing, moving is a massive pain. It's not just swapping a card reader.
Right.
That stickiness, plus their sheer scale, like 12,000 employees driving innovation and expansion, it makes it hard for niche competitors to keep up.
Okay, that paints a strong fundamental picture. Financial health looks good, competitive position seems solid, but now we got to shift gears. Fundamentals tell us what it should be worth. Technicals tell us what the market thinks it's worth right now. What are the charts saying?
Well, the charts are definitely backing up that bullish fundamental story. The trend is pretty clearly confirmed as bullish. Just look at the last 3 months, higher lows, higher highs. Classic signs of healthy buying, accumulation. It's actually been outperforming the broader financial sector, which is telling.
All right. And for listeners wanting concrete price levels, where are we trading now and what's the context? It looks like it's been in a bit of a tight range recently, say 73 to 76.70-ish. But you got to remember that huge 52-week range, right? From down near $44 up to almost $100.
Yeah, that wide range definitely suggests there could be room to run if this momentum holds. Technically speaking, we see really strong support building up just above $73. That seems to be the floor from this recent buying phase. Then on the upside, you've got resistance kicking in near $78 first. That lines up with some analyst targets. And then the bigger psychological level seems to be around $81. A solid break above $81 could signal a much bigger move.
And the momentum indicators, are they showing conviction, or is this move built on shaky ground?
No, they look pretty stable, quite positive actually. The stock's holding consistently above both its 50-day and 200-day moving averages. That usually suggests the longer-term uptrend is intact. Sustained interest. And interestingly, the volatility is quite stable, around 5.5% weekly. That's actually below the market average. Suggests confidence, not just wild speculation. And the momentum, like the RSI indicator, it's bullish, trending sort of 60-65, but definitely not in overbought territory yet. Still room there.
So putting those technicals together, the near-term outlook seems, reasonably promising. Analysts seem to be eyeing a range, maybe $74 to $85 over the next, say, 3 months. But that depends on positive catalysts actually happening, right?
Exactly. Which brings us nicely to the next part, the road ahead. What could actually drive the price?
We've got a solid company, bullish charts.
Uh-huh.
Now we need the spark. What are the key events coming up?
Okay, several big ones right around the corner. The main event everyone's watching is the Q3 2025 earnings report. That's scheduled for November 6th. Given everything we just discussed, those earnings revisions, that massive projected EPS jump, the market's expecting confirmation that growth really is accelerating, especially in Cash App and Square's profitable areas.
High stakes then.
Extremely high. A miss could be bad, obviously, but a solid beat, that could really ignite the stock.
Right, November 6th, big day. And then shortly after that, we get the institutional filings, the 13Fs, around November 24th. We kind of suspect big funds have been buying, but these filings will confirm it. If they show large institutional inflows, that's a huge vote of confidence.
And the general sentiment is already quite positive, even before those dates. Analyst consensus is overwhelmingly bullish. You've got maybe 30, 35 analysts rating it buy or strong buy. Their average price targets for the next 12 months are clustering around, say, $78 to $81.60. So maybe 5% to 9% upside from here, according to them. And operationally, there was that big partnership announced in October with Grubhub.
Oh, yeah, I saw that.
Integrating Square POS deeper into restaurants. That's a significant win, embedding them further into that whole sector.
That Grubhub deal is concrete news.
Yeah.
Solid. But let's touch on the less concrete stuff, the rumors, the speculation, stuff you need to take with a grain of salt. We're hearing whispers about potentially significant international moves, maybe Asia or Europe expansion.
That's definitely out there. And lots of buzz around internal product stuff, too. There's serious chatter about a major update for Cash Apps, specifically maybe deeper crypto wallet integration. Could be announced around earnings time.
Interesting.
Positioning it more as a direct competitor in digital finance. And then there's always the background noise about potential M&A. Maybe Block looking to buy smaller fintechs to bolt onto Square, perhaps in areas like payroll or lending.
Okay, lots of potential fuel there, even if some is just rumor. But we need balance. What are the real risks? What could go wrong here?
Well, number one is probably company-specific, just execution risk. Block moves incredibly fast with product releases. That speed can sometimes lead to issues, quality, reliability, maybe even compliance headaches. They invest to manage it, but it's constant pressure.
Sure.
Second is the broader sector risk. Fintech is always sensitive to regulation, macro shifts, economic downturns. Though it's worth noting, Block has actually held up better than many peers in past downturns, probably because they have revenue from both consumers and merchants. It provides a bit of a hedge.
Okay, let's try and pull this all together then. We've got strong financials, positive chart momentum, a bunch of potential catalysts lining up. What's the overall takeaway from these sources?
Synthesizing it all, the assessment comes out as a pretty strong overall bullish rating. I'd say maybe a 9 out of 10 based on this info. The rationale is clear, strong fundamentals, especially that accelerating EPS, those persistent bullish chart patterns showing accumulation, and multiple catalysts converging right around November. The Q3 earnings are definitely the linchpin.
So for someone looking at this stock, thinking about timing, what's the perspective? Short-term play, long-term hold, both?
It actually looks interesting on both horizons based on this analysis. It seems attractive for maybe shorter-term trading over the next quarter, playing the run-up into those November-December catalysts. But fundamentally, given that strong competitive moat and their expansion plans, it also looks appealing as a potential long-term investment. And maybe just a final thought for you, the listener, to chew on. Think about this. You've got the new Grubhub deal pulling Block deeper into traditional physical commerce. At the same time, you have speculation about aggressive crypto expansion via Cash App. So what does this constant push into both traditional business and cutting-edge future finance mean for Block's identity long-term? Does it make them stronger or potentially vulnerable to rivals who stay laser-focused on just one thing? It's a really interesting balancing act they're performing, and it probably defines their future path.